Have you ever wondered what role central banks play in our economy? Picture an enigma, shrouded in financial jargon and complex operations. That's how many perceive central banks. But why should this matter to you? Well, these institutions wield significant power, influencing everything from your savings account interest rate to the price of your morning coffee. So, whether you're a financial whiz kid or a curious bystander, understanding central banks is crucial. Let's demystify this economic powerhouse. So, what exactly is a central bank? Well, think of it as the financial backbone of a country. Its main purpose? To ensure the country's economic stability. Now, how does it do this? By controlling the flow of money and setting the interest rates. Let's break it down. Imagine the economy as a massive machine, and the central bank is its operator. The central bank can speed up or slow down the machine by manipulating interest rates. Lower rates encourage borrowing and spending, which speeds up the economy. Conversely, higher rates discourage borrowing, slowing things down. You might have heard of some central banks like the Federal Reserve in the United States or the European Central Bank. These institutions are the financial powerhouses that steer their respective economies, often influencing global economic trends. In essence, central banks have a significant influence on our economic life, even if we don't see it directly. Now that we know what a central bank is, let's delve into its key functions. Central banks play a pivotal role in shaping a country's economic landscape. One of their primary duties is controlling inflation. Think of inflation as the rate at which the general level of prices for goods and services is rising. Central banks manipulate interest rates to keep inflation in check. For instance, if prices start to climb too quickly, a central bank might raise interest rates. By doing so, it slows down spending, which in turn reduces inflation. Another key function of central banks is managing currency exchange rates. This is crucial for countries involved in international trade. Let's take the example of the European Central Bank. It monitors the exchange rate of the euro with other major currencies, and intervenes if it sees the euro's value fluctuating too drastically. Finally, central banks serve as a lender of last resort. This means that during times of financial crises, when banks are short of money, the central bank steps in to provide funds. A prime example of this is the Federal Reserve's intervention during the financial crisis of 2008. The Fed provided emergency loans to banks to prevent the collapse of the financial system. These actions might seem distant, but they impact everything from the price of your groceries to the stability of your job. You might be wondering, why should I care about central banks? Well, let's think about it. Every time you swipe your card, every paycheck you receive, every loan you consider, there's a hidden hand guiding these transactions. That's the central bank. Their decisions directly influence the state of your personal finances. Ever noticed how interest rates on your savings or loans change? That's the central bank at work. They also have a significant impact on the job market. They regulate the money supply, which can either stimulate job growth or cause unemployment. But it's more than just about your wallet or career. The overall health of our economy, our country's financial stability, is under the watchful eye of the central bank. Understanding these institutions, their decisions and influences can empower us as citizens. It gives us the ability to make informed decisions and participate more effectively in our economic discourse. Knowledge is power, and understanding the role of central banks in our economy gives us insight into the world we live in. If you found this video helpful, don't forget to like, subscribe, and share. Your support helps us create more informative content. Thanks for watching.